Hey there traders, welcome back for episode 28 from the StockBandit.tv. I'm sure glad that you made it. So in this episode, what we're going to do is talk a little bit about spring cleaning. You know, March is here and it's about that time to start cleaning some things up, but I'm not talking about that closet of yours that's full of clutter or that garage which hasn't seen much daylight since maybe last fall. Instead, what I'm talking about is your watch list, and that is the list. Those are the stocks that you flip through day after day in search of setups to trade. Now, you know, those watch lists get a little bit cluttered too, and that means that we've got to maintain some order there if we want to stay efficient. And if you're like me, your time is valuable, so you don't want to waste it by flipping through stocks which just don't fall within your parameters. So throughout this market correction, what's happened is we've seen most stocks go through some huge contractions in price. And as I zoom out on pretty much any of these charts, you're going to see many of them are well off their highs set just a few months ago. And so that's pretty common. And to borrow a phrase from Seinfeld, we could say that many of them have experienced some significant shrinkage. So one way to really quickly streamline your watch list is just set some parameters for price. Now, many of you have upper price thresholds for stocks that you don't want to trade. So maybe you know that you don't ever trade Google or NVR in the mid 300s. Maybe you don't even trade stocks like CME or maybe for solar, in triple digit land. Maybe you just avoid all those together, and that's okay. You don't have to trade those kinds of stocks in order to do well. But do you have a downside price threshold? Most of us know that we need to avoid penny stocks, but what's your lower threshold for stocks when it comes to just how inexpensive of a share price is not worth touching? You need to know that. And that's an important question right now, as that tradable universe of stocks has really just become notably smaller by that measure. So what you can do is just sort your watch list by price and go down to the bottom of it. See what's no longer really worth trading. You know, here's a stock that just a few months ago was a double-digit stock. Now it's under $1. That should be removed. IO, here's another one. Just a short time ago, back in the teens. Now it's under $1. Here's one that's now a dollar stock from double-digit territory. So as you start flipping through a lot of stocks, you see major corrections have taken place, and some of these just no longer are moving much, and they're therefore worth removing from your watch list. And as this bear market claims even more victims, and many more stocks which formerly were tradable now drift off into obscurity in the low single-digit land, be sure to pull those off your watch list too. The odds are that they just aren't likely to move very much, and that means that your attention could definitely be spent better elsewhere. All right, thanks for joining me. I'll see you soon with another video, but in the meantime, trade like a bandit.